Hi, Drew. How are you?
Good. How are you?
Good, good. So today we're talking about interest rates, and it has been a roller coaster of a year. We go from highs to lows. Kind of feel like we're going back up on the roller coaster, and we'll see if we
Yeah.
are at the top now. What do you think?
I don't have a crystal ball, and if I did, I would be the best person to talk to. I still am, but just based on a lot of the rates have been going predominantly on data, so they're not really as it's predominantly focusing on different reports that come out, both in kind of across the globe and also within the states. And yesterday, I saw our rates got like the average mortgage rate got up to about 7.75, so 7.75, which is the highest that I've ever seen it. Um, and also just barely higher, the highest that we've seen in about 2 decades. The 10-year Treasury note was the highest we've seen, I think, since 2007. And so we were kind of breaking records yesterday. But with that said, some new data came out last night and this morning about the PMI data, and it's not private mortgage insurance. It's called the Purchasing Managers Indices. We won't go into too much detail about what all those are. Basically, those are coming down, and we're seeing a contraction of the market. And that's, in regards to mortgages, that's been a good thing. So we're seeing rates now kind of come down. I saw we've pretty much changed by 1/8 better for the better just today alone. And so we're hoping that this is the beginning of the downward trend for rates in the future. I've seen different predictions about them going down into the sixes later this year, fives the next year, and even fours into the year after that. Now, I can't say for sure if those are accurate or not, but I can say that based on what I'm seeing in different markets, that hopefully this is now the peak and that they're going to start coming down soon.
Yeah, I know of a lot
A
of
bit more
buyers that
bearable
are
for
waiting
people.
in the winds for it to come back down. And even people who want to upsize or downsize, they have a house and they would like to make a change, but it's hard to make a change when the interest rate's at 7.75.
Yeah.
But to be honest, there's less competition right now than there is when it is in the fours and even actually in the fives. I will say I see a number of buyers jump in when we get close to five, or even with the seller buy down of an interest rate. So they'll get seller concessions when in the offer. And from six, they buy it down to five. I see a lot of buyers jump back in the market at that time too. So it's like give and take, right? So you have less competition right now, and the people that are selling need to sell for one reason or another. And
Mhm.
um, so you'll have to handle a higher interest rate for a few years, or we'll definitely work on getting more of those seller concessions, right? So
Yeah. No, there's always gonna be give and take. Yeah, everyone has to just remember, if you're feeling uncertain about interest rates, so is your neighbor. And so as rates go up, as rates go down, it affects everybody. And so I think thinking about the competitiveness of the market is really important. And then even getting in like right now at this moment when rates are high, we can float your rate down. And so if people hear, oh, it's the highest rate, we've seen in a long time, and then they step out of the market, they don't want to place an offer. I actually had a client recently who said, you know what, I'm going to hold off on this one and see if rates come down a little bit more. I'm not going to place an offer. And so that just reduced competition on that house. So you could have gotten into it, floated your rate, and maybe got a better one in a month, or perhaps you can always refinance. It's not like the stock market in the sense that you buy high and then you kind of just have to suck it up if the market goes down. If you buy with a high interest rate, you can always refinance. And so remember, these interest rates are less than 10%. And so we've been seeing when the market's hot, rates are low, homes go for over 10% over asking price. And so you have to remember, if it goes down to 5%, that sounds so much better than 7%. That's only 2%. So you're only saving 2% per year on that. And if it means that you can save 3% or 6% or 10% on your offer price, that's also really important. And so there's two components to how much your mortgage payment is. And I think that people focus a little bit too much on the rate. and that they need to focus a little bit more on the payment.
Yeah.
Because the payment, there's two parts to it. There's loan rate and there's loan size. So if you can keep that size lower, then you can get in with a similar payment to, being high, and then refinance out of it, and you get the lowest payment because you have the lowest loan amount.
Yeah, that's very true. I think that is really important because a lot of people do overlook that second part. And right now you can ask for those seller concessions and get even the price down a little bit. So
Yeah.
yeah, great reminders. So that's why we have you, Drew. So
Well, that's why we're both on this call. It's a two-part transaction. There's rate, there's loan, and then there's purchase price. And people are forgetting that the purchase price actually might play a bigger role. I just checked this morning just because I was curious, where rates are right now. It's about $12,000 in loan amount is equal to about 1/8% in interest rate. And so
wow.
that obviously, affects qualifying and things like that. But, if you can save $50,000 on your offer price, you're basically saving, almost like a 0.5% or so in interest, or in interest equivalent of payment.
Yeah.
And so, saving that amount is really important up front.
Yeah, that makes sense. Well,
You can't refinance your purchase price.
no, you can never. You're stuck with that. So no. Well, that's good to know. And I'm glad we're not making offers over 100,000 that like we did 2 years ago or a year ago.
Yeah.
And it's all in perspective, right? So
Yeah.
yeah. Well, I hope next week we get another update where it's going back down. If not,
Yeah.
we'll see how
We'll
long it
see.
takes for us to come down on this roller coaster ride, right? So
Yes, it is hard to make a rate prediction based on a day. I will admit that. But that day is a sign of other factors that have been showing trends. And so the rate in today is kind of a reaction to previous market trends that have somewhat not stabilized, but shown that they're going in the right direction. And so it's a good sign.
nice. Well, thank you so much for the update, and we'll see you next week. Bye, everyone.
Talk to you next week. Bye.